be a fabulous event tomorrow for the UK Financial Crime Leaders Summit.
Bang for buck, this is the best event that we attend all year.
So for me, today's event exceeded all expectations, and I've been really, really impressed by the caliber of speakers. And thank you so much for agreeing to join us on the podcast. So just a little bit about what we're doing. Jane, this was Jane's idea, and I think it's a fantastic idea. Where before we even go to Frankfurt, that we start the conversations a little bit earlier, and then start sharing a little bit about what people should be expecting in terms of content, speakers, etc. at the event. And given you're going to be one of our speakers, which panel are you on?
I think I'm moderating two panels, one on fraud and the other one is on transaction monitoring.
Oh, lucky you.
Most exciting topics, at least.
If I'm perfectly honest with you, I actually think that transaction monitoring is the most exciting area of financial crime. And the reason I say that is KYC enables us to understand who the client is based on what a client has told us. Transaction behavior and typologies, they tell us who the customer actually is. And we don't really look at it through that lens very much. We've mostly focused on rules and scenario-based systems, and there's reasons for that. Obviously, limitations in technology, etc. But from my perspective, with the introduction of AI and the exciting ability to begin to start profiling customers and behaviors, I've actually without digital identity and KYC, I don't think KYC itself, and I said this actually at the Frankfurt conference last year, in my opinion, I don't think that KYC is the value add that we think it is, because we're obtaining information on a client based on what the client is telling us about who they are. But it's not until they start operating the account that we actually find out who they are. And the truth is, if they've come in as a low-risk customer. So that's why I think transaction monitoring is the most exciting area of compliance moving forward with new technology.
Definitely, I would agree. And I mean, you mentioned KYC, right? And I would say the KYC measures are somehow limited in their effectiveness, right? You have to believe what the customer is saying. And our next step is, if you want to improve KYC, you need to understand AI, machine learning, I don't know, much more information coming from the transaction part. So what we did, we started to implement machine learning techniques in our transaction monitoring. And that gives us a chance now to improve also the KYC measures, right? Because we can use a lot of information coming from the transaction monitoring and bring it to the KYC part as well, and just improve the effectiveness. It's not about efficiency in KYC, it's effectiveness, right?
Yeah.
But we can do a lot more here. And I think that's a very, very interesting area of research currently.
Yeah, no, and I really believe it's going to be the future of, the future of financial crime compliance is data, and transaction monitoring is our focus, it's going to be the focal data point, if I'm honest with you, because it's the only way we really can determine who the client is, i.e., are they behaving as we would expect them to behave, or in a way that's not aligned to the profile that we have on file. And without digital identity, where we really can verify the information that's being provided, because it's going through government sources that have verified the information, I just feel that KYC to an extent is becoming a more meaningless exercise. But I try not to say that too loudly, because there are still some people who are like, you can't say that because we need KYC, it's so important. I don't disagree that it's not important, but you need to ask yourself, what is it that we're getting from that information? And also, very importantly, what are we using? I heard a really interesting statistic recently that when we onboard a customer through the onboarding documentation and other factors of screening data, etc., we obtain around 1,400 data points per customer. But we only use around 120 to 140 of those day to day. So we're leaving, you know, over 1,000 data points on the shelf at the point of onboarding. And where the future of compliance, the future of financial crime is data driven, what does that tell us about how effective our systems currently are?
Yeah, you're totally right. And I think we can improve a lot. Right? So technique is available meanwhile, right? So machine learning is more like a standard. So we can use some of the tools, just put some data and calculate whatever, a score, a probability, somehow not only low, medium, high risk profiles, but more like telling the truth of the client. Right?
Absolutely. So tell me, Carsten, do you want to kind of we kind of went straight into the discussion point in the discussions, but do you want to talk a little bit about who you are and yourself and your kind of your background and where you are now as well? And also really what I find really interesting is, you know, the transition of your career to getting to where you are now, and what is your passion in what you're doing today?
So I'm in the banking area for more than 25 years now, working in different areas, mostly in a second line, risk management, credit risk management, other functions there. Started to work on fraud prevention 15 years ago. And at that time, it was very interesting because most of the banks did not see the risk and the losses resulting from fraudulent activity, right? And at that time, I started to work with data. We built a score, implemented it, focusing on mortgage fraud in the mortgage area. And we've been able to save, I don't know, 100 million a year, just reducing losses coming from fraudulent attacks, right? And that was really, really interesting to me to further to do a little more research in that area. And then I moved to compliance, working on a fraud governance framework, setting up more like the strategic components of a fraud prevention framework. And then I moved to fintech a couple of years ago, working on a fraud area again. And I think we all know when you start a new business and you're focusing on growth, I mean, it comes with the business, right? So you will get a lot of you will welcome a lot of customers, a lot of fraudsters on your platform, right? So you have to implement somehow measures to detect and to prevent those clients and those activities. And that's what I did in the last years. I've been the Group MLRO, Director of Anti-Financial Crime of N26. Had a pleasure to lead it, to guide a team through a monitorship with some of our European regulators. But I mean, yeah, very challenging, but it gave us a chance to rethink, right? To think about how to become better, how to increase effectiveness and efficiency of our systems. And finally, we came up with a machine learning approach, integrated it into our transaction monitoring, and we've been able to reduce the false positive rate by more than 30% without losing any SAR.
Wow.
Right? So I think that's good news. I mean, we could go up to 70% or even more, right? But then it's more like calibrating how much information do we lose, how much SARs we would lose. So it's more like a calculation, a thoughtful analysis.
Mm-hmm.
And at that time also, and that's my real passion, right? We've been fighting fraud and fraud activities on the platform, and I would say we've been able to reduce the number of fraudsters significantly below market level, right? At that time, I think really a success from my team.
Yeah.
And that's my passion, right? So, and I think if you look at the development currently, we do see an increasing number of fraud cases. Our customers are getting defrauded. They're getting scammed, phished, but whatever. I mean, there are a wide variety of patterns. And in the end, our customers losing their money, right? Their savings. And I think that should be one of our key tasks to help them to
Absolutely.
detect the fraudulent activity and to stop outgoing transactions. And on the other side, to stop money mule accounts, right?
Yeah.
And that's another, I think, another concerning development we could monitor within the last, I don't know, one and a half years. We do see an increasing number of money mule accounts, not really active currently, but they are there, right?
Yeah.
Just in case you need an account. So
Exactly.
I think we have to work in that area much more than we did before, and we have to understand that money laundering and fraud prevention, they are not two stories, right? So it's an integrated approach, or we should follow an integrated approach.
Absolutely. There were so many questions I have for you, Carsten. I know we don't have a lot of time, there are so many I have for you because I love what you just finished there with in terms of that integrated approach. I say a massive believer. I think the facts speak for themselves. When we looked historically at financial crime, we bucketed everything into, anti-money laundering, counter-terrorist financing, tax evasion, cybersecurity, data privacy, fraud, market abuse. Everything was siloed, which meant from a risk perspective that those responsibilities and oversight were handed out to different respective departments. So, data privacy mostly would end up under legal. I saw in some instances even sanctions falling under regulatory compliance, but not financial crime compliance, which was an interesting move. Cybersecurity falling under the CTO, and also you'd have then your data DPO, your data privacy officer set up, AML, CFT sitting under kind of financial crime, compliance, which really only was AML and CFT, but yet CFT being such a small subset because most terrorist financing is actually done through completely legitimate monies. So again, the tools that we use for anti-money laundering will not necessarily work for identifying counter-terrorist financing because we're looking at a very different, should I say, reverse money laundering, so to speak, with a very different kind of, should I say, belief system which drives it. And so again, so over the years, I've seen all of this, and now today's modern financial crimes, they're not siloed. We don't just see fraud happening, credit card fraud. We just don't see tax evasion happening. Modern day financial crimes are more and more becoming a combination of a multitude of these different subsets, which means these departments need to start talking to one another. And, I've said this quite vocally, and I've had some opposition with some senior people in anti-money laundering say, if you think that's the case, then you don't understand AML. And it's like, no, I perfectly well understand it. And I really love the fact that we broke it down, financial crime, we broke it down into subcomponents and we mastered it within the risk mitigation. But we're at this you said at this divergence right now. We're at this fork in the road where we now need to bring all of that expertise together, not saying one person should run everything, but bringing that expertise together. So when we implement controls, we're doing it more holistically. And I don't know what your thoughts are around that. I'm quite passionate now of if we're trying to clean up data within organizations, we need to go across the entire risk framework, including market risk, credit risk, you name it, compliance, op risk. We need to bring all of the risk factors together and then all of the underlying data that's all over the systems in different places with multiple sources of truth. I'm really excited about that evolution because we've operated too much in silos in the past. Obviously, with your background, you've worked in TradeFi. Obviously, you've moved over into kind of, may I say, like kind of fintechs. Where do you see that evolution happening? Do you see it happening?
Good question. Yeah, I think I would say the main task is to make data available in a good quality. And I would say in the fintech area, it's much easier, right? So the systems are new, just one system, not the thousands of them, like you would find in a traditional bank. So it's much easier to bring all the relevant data together and then again, it's easier to apply somehow machine learning techniques. I would say for the more traditional banks, that's a huge problem, real concern, right? How to get the right data, how to make them available, how to make them usable. And once this is done, again, it would be easy just to apply somehow some techniques and come up with scores, with probabilities. Somehow this is scoring, scaling of the clients and the transactions.
How do you think and one of the things you mentioned there is about money mule accounts. And it's actually something I'm quite passionate about as well. I'm sure, I don't know if, I was about to say, I'm sure you do. I actually don't know. I, at least on a weekly basis, get added to like a WhatsApp group where it is a blatant money mule attempt. And there'll be hundreds of other participants that have also been added to these groups. And before the admin changes the permissions, and the admins are usually from random countries, like, but writing in Portuguese. And I've tested it that if I write in multiple different languages, they'll reply in Portuguese instantly, which is also incredibly impressive. So you can see that this has all got, it's sophisticated, it's all got kind of clear tech behind it. Those money mule accounts, they are on the outlook for people who have specific accounts in specific countries. And as you rightly said, they're not going to use them immediately. They're going to sit dormant until there's a need for their plan B, plan C, plan D to be executed. Education is a massive area that we need. For me, that's our first kind of point of defense, is educating the consumer. But where people are from low-income families, are vulnerable, are, just don't necessarily understand what's happened with giving somebody the information on their bank account, those dormant money mule accounts, how concerned are you right now about what this is going to cause from an industry perspective moving forward? From my opinion is we are on the verge of a pandemic in respect of financial crimes like we've never seen before. And the reason why I ask this, and this is quite personal, a few weeks back, I was actually with Bruma, the new CEO of AMLA, and with the board as well, with Derval and the team in Dublin. And one of the gentlemen from one of the FIUs in France was introducing kind of the statement of where they're going to be going in respect of focus areas. And their big focus is going to be on drugs and then the war against drugs. And I kind of made the comment, we've been fighting this since the 70s. And there are other issues involved in terms of enforcement around that. But for the person on the street, there is a pandemic on our hands right now in respect of financial crime. Organizations, TradeFi, fintechs, these money mule accounts are a massive danger to us. So what can we do? And there didn't seem to be much response in terms of that being a focal area. And so I'd like to hear from you. Maybe I shouldn't have given you the background on it because maybe your answer may be a little more muted. How concerned are you about the dormancy in these current money mule accounts and in terms of what that could mean for the industry moving forward?
So the short answer is I'm really concerned. And I would say we don't understand it's a pandemic currently, right? So there's not the right awareness spent to that topic. So from my experience, we've seen in one of the European countries, we've seen a huge wave coming of money mule accounts organized via social media, right? So young people getting a contract, like a working contract, right? Testing banks. So again, a lot of stories, a lot of patterns, and then somehow transactions started from one to the other account, €5, €10, €50, not much, right? So we've been thinking about what is going on there. It's more like creating a common transaction pattern, right? To make those accounts low risk in the eyes of the banks, right? So that might be, but maybe it's also another reason for it. But we have to understand the fraud activities. It's based on organized crime, right? So there are scammer cities, huge cities, Myanmar, Asia, in other countries as well. 10,000s of workers living there, working there, and we have to understand what's going on there. So I had good discussions with some of our regulators recently, and they wanted to focus on drugs, which is correct and right, and they wanted to focus on human trafficking, but not on the scam activity, right? So just low effect cases.
Yeah.
But I would not agree, because here we do see organized crime, workers working on different hierarchy levels, right?
Yes.
And most of them, or many of them, are somehow slaves, right, to the organized
Yeah.
crime organizations. So we
And
have to
some of
understand that everything somehow is coming together, and
yeah.
there's some analysis available saying that the fraud activities are meanwhile bigger than the drug activities worldwide. So not sure if I would agree today, but I think just saying it or thinking about it, how important is the fraud activity, or are the fraud activities on global crime universe in comparison to drugs or others? It's a huge part, and we have
Yeah.
to increase our awareness first, right? And then there are different things we can do, different measures we can apply. One is raise the awareness of our customers, of our
Yeah.
clients. And there are some activities ongoing, not really, I wouldn't say not organized centrally from the banking area. So I'm discussing currently an initiative with somehow a local teaching, or going to schools and giving a lesson, right? 1 hour, 2 hours, talking about scams, how easy it is to fake your ID card, and saying, don't do it.
Yeah.
But right, so to increase the awareness. On the other side, banks could do a lot more, right? With a bank can do a lot more with its own data, right? Saying maybe we should create somehow, or we should develop a score similar to the probability of default, right? The probability of fraud. How likely is this customer will become a fraudster or a money mule, right? So just important information we already have in our data, so we could use it. Next step would be collaborate with other banks, sharing information. And there are some initiatives ongoing. In the Netherlands, there's another one recently published, or go live published in Germany, Euro Safe AML. So we are working on some of those initiatives, but it becomes, I mean, we have to intensify our activities there. And as soon as we understand that we can share data and that we can share information, and that those activities can be in line with GDPR, and as soon as we don't use GDPR to prevent us from doing something, right? So then I think we could make a big step forward, and helping our clients, helping our customers, and somehow preventing money mule activities, fraudulent activities, and all the criminal activities behind.
Absolutely. I'm not going to say that I should take credit for it, because I'm sure there was lots of other complaints. But not this year, but last year in March in Dublin, I actually had the opportunity to meet with Raluca, who's head of the AML team at the European Commission. And I raised the issue about data privacy hindering internal investigations and information sharing. And subsequently, we've seen the introduction of Article 75. Don't want to take credit for it, but I feel like I should, because her response to me was, I didn't realize, and I'm going to take that back and discuss it with my peers and with my colleagues. So you can thank me later. That was all my doing. No,
thanks a lot. Really appreciate it.
Well, it's the least I can do.
Great to have it. Great to have it now, right?
No, but it was interesting, because this is where this kind of public-private partnerships really, really work, because there is a privilege of information that sits within the public sector, and there's a privilege of information that sits in the private sector. And we had a situation in the past that never should the two meet. But now we're starting to converge together. We talk a lot. Whether we're actually making real impact at the moment is a further thing that needs to be seen. But to your point as well on client awareness, and also what you mentioned about the schools, in fact, last year I went back to the British government and I petitioned for basically financial, wouldn't even say financial skill set training, but financial literacy training for children in schools, predominantly one, so they could be financially literate, because I don't think we teach children at school to be financially literate, but there's maybe other reasons for that, which I won't get into. But more importantly was around scams, in particular sextortion scams that are affecting predominantly teenage boys. And you know, I'm a mother of three girls. Jane as well is a mother. If I'm not mistaken, Jane with two girls and two boys, or two girls and a son. And you know, as
Yep,
mothers, yeah, is that correct, Jane? Two girls and a boy.
that's right. Yeah, big girls and a boy. Yeah. Yeah.
And as mothers, you know, especially when we're hearing and also working in the industry, we want to make sure that we can protect our children, which I'm sure as well is something that's really driving you with the work that you mentioned you're doing with the NGO. In fact, not next week, but the week after, I'm going to be going to my daughter's school in Scotland to deliver at their assembly. I hope she's not too embarrassed about it, but we're going to be talking about money mules, social media scams, people getting access to your bank account, sextortion, because it is real. But one of the things that you mentioned, which I'm going to be doing there, is I'm going to be showing them exactly where this is originating from, showing them these, you know, financial crime cities. In particular, as you mentioned, I know is the Philippines, with Myanmar, in Thailand. And one of the things that, you know, people always, you know, we don't talk enough about is the number of those people that are involved have actually been kidnapped or trafficked themselves. And one of the points, and again, this goes back to maybe like the issue I have about the focus on drugs is people choose to take drugs, but people do not choose to be victims of financial scams or crimes. And sometimes it comes about not through ignorance or a lack of education, but through very sophisticated psychological manipulation. And we're seeing a lot. I've been working with a few clients, one in particular, he lost 1.2 million. And this is a aeronautical engineer. Very, very sophisticated psychological investment scam, which was shocking at just the extreme lengths that individuals are willing to go to. They're targeting individuals specifically in an age range, you know, early to mid 60s, close to retirement, single. They're seeing their social media. They see they have a nice life. They can see their jobs on LinkedIn. So, you know, they get all of this information together and then they do these targeted, you know, exercises. And this money, you're not going to get it back because it all gets transferred overseas. And then to your point about banks doing much better, sometimes I feel for the banks. And I feel for them in that they're the ones that are having to spend all of the money on the risk controls and also now on education. And as financial crime sophistication has evolved, so does the need for technology needs to evolve. Whereas the criminals have the same access to technology that we have within the banks. And I don't believe that the financial institutions are being supported enough with the innovation that's needed and the data, real-time data that's needed in order to develop those systems. And again, I know we kind of, I've talked to like many of the points you've spoke to, but talking specifically then about systems and about transaction monitoring and fraud, our systems are far from where they need to be in terms of the sophistication. The technology is at its infancy if we look from an AI perspective. You know, HSBC was able to identify complex networks in its books they didn't know existed with the implementation, for example, of Google AI, which is publicly known. How do you feel financial institutions could benefit more from cooperation with public authorities and public bodies?
That's an easy answer. A lot. We could benefit a lot, both sides, right? Collaborating, working together. I mean, that's what I try to talk about. I don't know, last 10 years or so. So we have to collaborate. There are always two steps, right? The first step is you need to be aware, but what data is already available in the bank, right?
Yeah.
And then you can, I don't know, you can make already a huge step forward. But to some extent, you need external information.
Yeah.
in every area. It could be related to KYC, it could be related to transaction, to whatever, right? And the technique is available. We don't have to develop somehow logic or network analysis or whatever. Every tool that is needed is already available. So we need to align, and I think now the banks have to go the next steps together, right? Joining the same, I don't know, the same room, the same working group, and aligning. Now we can share data, and then again, it's just like I would say 90% is data, and the other 10% is somehow technique, whatever, right? So we can do, and we could improve a lot. Not sure what the expectation is. I had some discussions with regulators, also with the EU Commission, and they said, you know what, we put some pressure on the banking area. They have enough money, they can invest in prevention measures, right? So is that fair? I don't know, would be another discussion, right? But banks can do a little more. They cannot prevent everything, right? And that's what we have to accept as well, right? So it can't be.
You said the word prevent, and I don't mean to interrupt you, but it's actually something which there was a lot of contention around the usage of that word in the industry. You know, is our job to detect, to prevent, or to, you know, prevent, detect, or protect?
I like the question. All the three topics, right?
If you ask John Cusack, he will tell you that our job is definitely not to prevent it, because we can't prevent it. That I agree with him on. I believe, however, it's our job to detect and to protect the less vulnerable, or the more vulnerable. He disagreed with me in the protection. He said our job is merely detection. And I actually feel like I really feel like the role that we play serves a purpose. And to say that it's merely about detection undermines that feeling of, you know, the feeling of paying it forward that I feel I get in my role.
Yeah, but detection results into prevention, right? And maybe it's worth to, I don't know, spend a thought on, I don't know, 100 years, 130 years ago, banks made advertisement with somehow, I don't know, we protect your money, right? So maybe we can think about this old advertisement, right? How can we protect our customers today? Can we help them? And yes, we can do. We have some measures that we could implement, but it's not 100% certainty, right? And I think that's another, maybe another thought or limitation. We cannot fully insure our clients for stupid decisions, right? Transactions into, I don't know, an investment scheme or whatever, right? So, but we can definitely help and support.
So it's actually an interesting thing recently with the introduction in the UK of this kind of APP reimbursement, this authorized push payment reimbursement scheme. And it was a couple of weeks ago, and my apologies, my brain at the moment isn't what it used to be. Somebody said to me recently, and it was something I maybe ignorantly hadn't thought about, because of the introduction of the APP scheme, people are more likely to take riskier investment decisions than they previously would have been, because they have that net to catch them to get their money back. Do you think that that's something that we're seeing? I wouldn't say that it's at an extreme level, but do you think that people who are aware of the scheme are like, you know what, even if I do lose the money up to this amount, I'll get it back anyway?
I think it's very likely, right, that people start thinking this way, right? They are fully insured. And in that area, we cannot fully insure our customers.
Yeah, but it's a bit like renting a car and you've got, fully comp insurance. You don't start driving it like a dodgem
Right.
down the road, left and right. You have to take some, I don't know, is it integrity? You have to take some accountability.
Yeah, definitely.
Yeah. Okay. So is there anything else that kind of you would like to touch on, to discuss? I don't know, Jane, have you got anything you'd want to add?
Only just to ask Carsten some of the topics you just touched on with what you're going to be talking about in September at the event in Frankfurt. Just which of those, I guess, was there anything from that we haven't touched on so far from what Oonagh and you have been discussing? up in Frankfurt.
Yeah, maybe we can summarize. I think we touched
Yeah.
all of the topics, right? So it's transaction monitoring, machine learning, collaboration in the banking area, not only in one country, but also, I don't know, European globally, or maybe let's take the first step locally or on a national level and then on European level, right? So what I would like to discuss in the panels is the current level, or the current let's say the research results of machine learning and transaction monitoring. So we implemented a machine learning component into the transaction monitoring, and I'm happy that our head of transaction monitoring, Christian Dahl, will be there as well, giving a little more insight what we did. And now it's more like, you know, getting somehow comfortable with the new situation, with the new tools, detecting the possibilities. How far can we go? In the beginning, I said we can easily save 30% of the false positives. We don't have to investigate. The next step would be, what are we doing with this information? I mean, we have a machine learning component in place, and this component could also deliver information to the KYC process. So we could say someday, not this year, maybe, I don't know, next year, fintechs are maybe a little faster than other banks, but we could think about how to combine KYC and transaction monitoring. I think it's really interesting to talk about, to share some ideas, insights, and maybe we can start a good discussion round afterwards, right?
Absolutely.
And the other part, the other panel is on collaboration and fraud. And there are some good activities and initiatives in the market currently. Not only verification of payee, there are some other things in place as well, like EBA Clearing is providing some our fraud score. Maybe not yet the final stage, but we are working on it, right? So we can do much more, and that's what I would like to discuss in that round as well. And maybe it's interesting to share our insights with not only in the fraud area, but also with the money laundering experts. And then again, I would say we need to collaborate also more between the silos, right? The fraud, sanction, money laundering, and hopefully we can somehow maybe get in touch more deeply with the regulators as well. There's one European regulator already having a strong focus on money use. A lot of work for the participating banks, for the affected banks, because they're really interested in understanding the network, right? So what is going on, and hopefully the other regulators can make some resources available as well to share this analysis, right? So and again, the feedback from the regulator side would be so factful for the banks, because we can learn, and we all have to learn.
It's exactly. It's not about reinventing the wheel. It is about, and I think one of the, if we look even kind of cross-border and kind of intercontinents, Australia is making leaps and bounds in my opinion, in the fraud arena. Like, it's just, they have taken this by the bull by the horns, and they're taking no prisoners in terms of detection, in terms of accountability and ownership within the industry, in terms of protecting the consumer as well. And you could say to an extent it's maybe a little bit harsh on the banks at times, but it's the more that we can do to share good practice, so that we're not each reinventing the wheel or trying to start at the same beginning point. Sharing that information so we can all start from an equal level of learning, so we can continue the innovation with how we're going to detect is going to be phenomenal. I met an amazing woman, actually, again in Dublin, Catherine de Ball, and she's head of Europol in Europe. She used to be head of the Belgian police prior to that. And she was really speaking with such passion about the need for awareness, and about basically the rise and the speed at which organized crime is developing, and also working together. Criminal syndicates that haven't in the past kind of worked together are now working together to complement each other's ability to launder. which is quite shocking because they all have different kind of key skill sets. So if the criminal networks are, using their partnerships to improve methodologies, we need to really kind of get onto the same kind of playing field, and start using the incredible information that we have. As I mentioned earlier, if we get 1,200 data points on a customer when we onboard them, but we only use like around 120 day to day, it's kind of a very clear message about how well we as an industry are using data at the moment. And I think if we could start at that point, it could be transformative.